Give it to me like. Give it to me like. Give it to me like.
Welcome everyone to our June 16th, 2023 edition of This Week in Crypto here. I'm the host of this live stream, Brian. I'll be going solo today, so queue up any questions for me and we'll start to talk about them at about 30 to 40 minutes after the hour. Any specific assets you have, questions about the overall market state right now, things like that, we're here to get into it and try to make what we can out of a tumultuous week of crypto here that saw, if you look at our new look screener here, by the way, it's looking very sharp. Bitcoin has dropped another 4.3%, Ethereum down at 9.8%. And then you see several altcoins here that just really got hammered. Many dropping well over 25%, like Matic. So this has not been a fun run here in June thus far. It's definitely been more retracing as the distant memory of the April and March pumps are becoming further and further into the distance. What we need to look at now is whether there are some potential good news divergences that are starting to pop up. And for the most part, we are seeing some of that. It's a question of, whether this is an immediate turnaround down here at the 25K level for Bitcoin, or whether we have a little while to wait and a little more pain to go through. Obviously, there's a significant amount of pain in the markets right now, with traders not being rewarded for their patience over the last 2.5 months now, a little over 2 months since the April 10th local top where Bitcoin nearly hit 31K. And now we just need to kind of sit back, look at the metrics, and figure out, when this pain will be done. So obviously I mentioned the price returns, not great for Bitcoin, Ethereum, or the majority of altcoins out there. Also take a look at how there's far less discussion. I actually think this is an anomaly because we changed some of our Twitter API social volume. So I think there actually was a spike at the early part of the week, especially when that big drop happened and Bitcoin went from like 28 to 26 all at once. So take this with a grain of salt. The 7-day social volume changes won't really be relevant until next week when we have a full week of new social volume. This is the 1-day change, of course, where you can see that Bitcoin and Ethereum are actually a little higher lately. Also, while we're here, take a quick look at the development activity. There we go. Yeah, so the order is still a little mixed up, but you can see that Polkadot, Kusama, and Cardano are still 1, 2, and 3. They're not quite sorting in chronological order yet, ever since we made the Sandbase 2.0 updates, but rest assured this will be fixed soon. And just keep in mind that we will have plenty of assets that are on this list that we're going to be doing some extensive coverage on. We're going to start looking at the specific things that some of these top developed assets are working on to give a little more transparency into why they're consistently in the top 10 to top 20 on the development activity rankings, according to Santiment's algorithm, where we only look at specific aspects of the assets in order to find why or to find the relevant development that they're going through, as opposed to just every single GitHub submission, which can often be deceiving. Okay, so with that said, let's look at some of the metrics going on right now. Beginning with transaction volume, we can see that Bitcoin is declining. There are a number of aspects that are kind of impacting the markets right now. The biggest one, arguably, is the SEC lawsuit that's going on. Let me actually, before we get into the metrics, I want to talk a little bit about what's actually hitting the FUD for traders right now, and making it so the average trader out there is just so fearful. We had BlackRock really jump into the news. If you go to this button over here and you click on the AI summary, you can really start to understand what is making these terms pop up on the top 10 trend list and get a little more information. This one for BlackRock says, the discussion revolves around the potential impact of BlackRock, a traditional finance giant entering the crypto market. Some argue it goes against the decentralized nature of crypto, while others believe it could bring more mainstream adoption. BlackRock influencing the social consensus of which Bitcoin chain is the real one is also discussed, with some expressing concern over potential manipulation. However, others argue that healthy social consensus involves multiple entities voicing their opinions. Overall, the impact of BlackRock's entry into crypto remains uncertain. So yeah, BlackRock is starting to become a formidable giant, where their trust in crypto and their emergence with a new ETF is absolutely something that can and should impact market prices, especially while people are wondering when the bleeding will end. I'm not sure so much about the Goose. ETF is still related to BlackRock. Netherlands, Binance's decision. Oh, because Binance recently left the Netherlands due to regulatory issues. So that's been in the news lately. Gilbert, well, I'm blanking on his name. I'm thinking of Gary Gensler, but I'm not sure who Gilbert would be in this context. I'll have to research that another time and let you guys know. Some of you in the chat may know, so feel free to chime in. Quantsroll is a technology vendor for Project Rosalind. Obviously, Binance still in the news big time. Coinbase was in the top 10 recently. It might have just dropped out, but yeah, Binance and Coinbase were kind of the big news, with both of them getting lawsuits at the beginning of the week from the SEC, which is something that many of us may be kind of used to by now. It seems to happen 1, 2, 3 times a year, where big exchanges get a slap on the wrist for the assets that they host may or may not being securities or not. And if they are securities, that means that they are illegally peddling assets out to the US to gamble on. If they're not securities, then the exchanges are generally safe. And usually there's some sort of settlement that occurs. We actually put out a poll I want to show you at the beginning of the week. And we asked people how big of a deal this was. Well, I know the poll's here. What we asked was how big of a deal it is and whether there's a chance that this can be a really big deal. Binance could be in jeopardy. Binance may not have any impact at all. I need to find it, one sec. It's a very good poll with good results on it. Here we go. So is Binance in serious trouble? 42.8% of people said not that serious. Minor fines are likely. No trouble whatsoever was the next most popular result. Yes, but just monetarily. And 13% of people said yes, Binance could actually shut down. That's a pretty big number. That's more than 1 out of 8 people who believe that right now. We certainly aren't fortune tellers, and we won't be able to tell you for certain what'll happen. But at least in terms of the level of fear that people had back when this was posted, when the news was breaking a week and a half ago, it seemed as though many people were not too terrified, and they said it was not too serious and only minor fines would happen. So here we are, 11 days later, and I bet if I put this post out again, this poll, there would be a little more fear this time around, because now we have seen that markets have continued to bleed since the 5th. We're at potential likelihood of Bitcoin actually falling below 25K for the first time in a little over 3 months. And yeah, people are legitimately worried. And now we can kind of segue back into the metrics, because I want to show the fear involved. Let's actually look at the ratio of on-chain transactions in volume versus in profit versus loss right now. So yeah, Bitcoin and Ethereum, we're still, oops, that's why. Let's look at the last 3 months here. There we go. So yeah, we were still in profit-taking land in late May and early June. And this was kind of the big warning sign, Ethereum especially. Largest profit take spike in over 3 months, even though prices were already starting to decline in early June. And now both Bitcoin and Ethereum are seeing more loss transactions than profit transactions. And that's definitely a big deal. It's indicative of a lot of fear and capitulation going on. This is the largest spike in the negative direction for both Bitcoin and Ethereum. If we zoom out to 6 months, yeah, the only time Bitcoin had a larger loss transaction spike was right before the big bounce happened. And that's typical. As strange as it is and backwards as it might sound, you want to see these ratios in the negative range, because that's an indication that capitulation is happening and that a higher likelihood of a bounce is upcoming. So we've got a big loss transaction here in early March. The next week, Bitcoin takes off. We have now had 3 straight, or I should say we're on our 3rd week of Bitcoin having more loss transactions than profits. So theoretically, it should only be a matter of time until we see what happens after a big one like this, or even after these here. Look at how the price bounced. So the worst case scenario would be if we were still seeing a lot of profit taking like we were seeing here. This would be for people buying dips here while the profit taking was still so high for Bitcoin and Ethereum. They should have, if they had known about this metric, it was telling them that we had further to fall down. But now there are signs that it could be coming to an end, at least temporarily. Certainly it is not an indication that, you know, markets are about to turn around permanently. All right, back to our on-chain metrics now. So if we start with volume here, we don't really see anything significant happening over the past 6 months. It's kind of just been a decline that started in March, and it hasn't really recovered since. Transaction volume, it's looked a little better. There is starting to be some signs that it's picking up once again. Not significantly to the point we saw in mid-February or mid-April when we were at that local top of about 31K. Going down to some of the main utility metrics, take a look first and foremost at this circulation spike that popped up yesterday. This was actually the largest spike here on June 15th since May 6th. So we hit about a 6-week high in terms of unique tokens moving on the network. That's generally a good thing. It can often, no matter what the asset, if there's a big spike in circulation, this can often correlate with a price direction change. And obviously the price direction has been down for about 2 months now. Daily active addresses, we were seeing, when we did this update a week ago, we were seeing a really nice rise with a couple straight days here with over 1 million addresses interacting on the BTC network. But yeah, now it's starting to fall down once again. And hopefully this is just a blip in the radar and we get right back here next week. This high address activity is usually caused by polarization and people either really wanting to buy or really wanting to sell at that time for news reasons. And obviously this is when the Binance lawsuit stuff first broke and people were undoubtedly reacting to that a bit. But with higher address activity, whether it's because of people being overly fearful or overly euphoric, it's usually a good thing when it's rising. So we'll keep an eye on that. MVRV. So as far as 30-day goes, yeah, we're still a little underwater, which is a good thing. The average trader is down about 3% if they've been active over the past 30 days. The average trader on the 365-day scale is still up at about plus 10.7%. So as we've talked about, ideally, we want to see them both under zero. That is when we see these bottoms, just like we saw here. Always, there's variability to anything, and we can't just guarantee that if you see both under zero, prices are about to bounce. But yeah, in most cases where we've seen both go under, that's when we see these huge surges. So quick intermission from the Bitcoin metrics. Let's take a look at the overall MVRV look. Now it will refresh here in about 10 to 15 seconds. Before it does though, look at just how much green there is here. These are all reflective of underbought assets according to the average trading returns going on their respective networks. And you can see several are actually above this opportunity zone dash line, indicating that it's a top 5% time to buy according to the MVRV metric on multiple time frames. In this case, we're just looking at 30-day, 90-day, and 6-month altogether. So it's kind of a mix of midterm time frames showing that we've got all sorts of assets that you may or may not have been thinking of for a while: League of Kingdoms, Magic Token, Merit Circle, Perpetual Protocol, Brief, Super Rare, VitDAO, Clover, ARPA Chain, ApeCoin, just to name a few. There are a lot of assets here that are showing some promising MVRV signals, indicating that we are, at the very least, at a smaller risk than we have seen in a long time in terms of holding or adding on to your position. In fact, none of them, other than this one just barely, Ocean Protocol, none of these assets are actually showing overbought signals right now. It's exclusively underbought for the most part. And generally this model gets it right. If almost all altcoins are in the severe underbought range, at the very least, we're very close. We're very close to seeing some sort of recovery. And a lot of that is going to depend on news, of course. And we haven't touched on interest rate terminology yet, but let's take a look at that now and see what's going on there, because the Fed at the beginning of the week made the decision to hold pat and for the first time in over a year, not raise interest rates. Let's just type in Fed interest rates and one other one. FOMC. So if we look at just the past month, yeah, not a lot of discussion related to it this time around. However, this big social volume spike, notice how it happened right as Bitcoin was falling. Social volume, big spike, boom, big drop. So interestingly, equities went way up like this, and crypto, along with gold and silver prices, by the way, fell off a cliff right after the speech by Jerome Powell, where he stated that interest rates would stay put. Kind of a weird phenomenon, because theoretically this should be good news for crypto. And over the past year and a half, as we've seen all these interest rate hikes, crypto has kind of ebbed and flowed the same way that equities have. If equities drop because of Jerome Powell's decision and the Fed's decision, crypto goes the same way. But this is kind of the first time that we're seeing like significant separation between equities and crypto. And it was never more evident than when we saw this latest decision to keep interest rates where they are here in the US, where I am. And as you guys know, the US economy and US traders in general are the biggest impact on crypto prices, just due to having the largest volume. But this is what I'm talking about. If I zoom in, I'll just do like around the last month here. We'll do like mid-May, about right. Our zoom in still isn't working. Sorry for the technical difficulties, folks. Santiment normally has super reliable interface browsing, but right now, as you guys know, we're making those final tweaks to our new Sandbase 2.0, and you can already tell there's been a lot of improvements here. It'll just take a few more days or maybe a week or two to get the final kinks ironed out. But yeah, this is what I'm talking about. You've got the S&P here in teal. We'll just do that. There's the S&P, and then here is Bitcoin, and here is Ethereum. So two of these are not like the other. We've got the S&P climbing. It's at a 14-month high, by the way. So the S&P has almost quietly been surging and making up for all the lost time that it was really sputtering last year. But crypto, outside of the first 3 months or so, 2.5 months, no, about almost 3.5 months. April 10th is when it hit its top. So outside the beginning of the year, crypto is actually starting to continue along the same path that it was on throughout 2022. And that was mostly blamed on equities. But this time around, we're seeing the S&P just absolutely go on a heater at the moment, while crypto is not keeping up this time around. So if we look at just, today through, let's try that again, today through June 2021. So yeah, I mean, this was the all-time high here in November 2021. Fell off a cliff, even though the S&P was rising. So there was still very little correlation here. And then after the S&P saw its first big crash in January of 2022, if I zoom in there, you can see how closely tied crypto and the S&P were together. They went up together, they went down together, and not until right about, I mean, 2 days after this, we go back into the last month. That's, yeah, just in the past week. This is like the biggest correlation break between the two that we've seen. It's almost an inverse correlation where, it's speculated, at least my hypothesis, there's a lot of institutions that found the interest rate news to be so good about equities that they may have actually pulled some money out of crypto to put back into stocks, because they're more confident in the US markets than they've been in for a long time, maybe arguably since Black Thursday happened and stocks and crypto all went down together a little over 3 years ago. So with this rising confidence in equities, there could be a period of time where crypto is the kind of the punching bag that falls down due to some of the money being taken out of it that had been sitting in it during the 2 years of COVID worries and then 1 year of just kind of stagnancy over this past year. So with all that said, I still think the interest rates not going up for once is an overall good thing for crypto. I think that there was just an overreaction that was likely aided by whales and sharks getting super trigger happy and moving money back into equities. Many of you may have different hypotheses. Obviously, this isn't investment advice. I'm not even really saying what to do, but there are multiple theories on what's going on right now with the US economy and how crypto is being impacted by it. And the latest is, of course, the SEC cracking down on major exchanges because they're accusing these exchanges like Binance and Coinbase of taking advantage of US customers. But there's always going to be some impact that the US economy has on crypto. And we have to be paying attention to what their stance is at any given time. The US and maybe China overall, anytime they decide to make an action on crypto, that seems to be when crypto has the biggest fluctuations. All right, so enough on that. Let's go back to the on-chain metrics with no further delay. We've touched on the utility metrics here with transaction volume, daily active addresses, and circulation. We just touched on MVRV. Let's go back to 6-month view and take a look at funding rates. So we have BitMEX that's looking pretty dormant right now for Bitcoin. Binance, actually, we saw some longs going on. DYDX, not a lot happening. And Deribit, just a little bit of longing going on. So overall, it's pretty neutral for Bitcoin. If we go here, though, you'll see several assets in the green here indicating there's shorting going on. We have Axie Infinity, which is constantly being shorted. We have Band Protocol. Cosmos, interestingly, is being shorted. That's fairly new. Dent is a regular shorted asset. Hedera, Kava, Near, OMG Network, Polkadot, which is interesting. Polkadot has actually been one of the better performing assets. So people are oftentimes reacting to just the best performing assets while the market is in a bear market like right now. And they short it because they know that that asset is ahead of the rest and likely has a better chance of pulling back. So you'll always see a few of those. Ren, Ravencoin, big shorting on Scale right now. Stellar, Storage, Tezos, Tron, Uniswap, and VE Chain and Wi-Fi to round out a few of the last. So there's actually quite a few altcoins that are being shorted right now. And notice that the shorting is going on while these black and gray bars indicating the price action, they're still very negative. So people are shorting as prices are dropping. That's usually a good sign that there can be a turnaround soon. Certainly not a guarantee. We've seen people successfully short before. It isn't outside of the realm of possibilities. But we tend to see liquidations when these shorts become prevalent enough. And there are quite a bit of shorts happening right now that we should be aware of. Going back to Bitcoin, like I said, Bitcoin's a little more neutral, but as the shorting adds up, it's something to keep an eye on. And, you know, I also like to look at coinglass.com. They're pretty good for showing the overall funding rates. And yeah, there's so much green here indicating negative funding rates, shorting going on right now. And it's sorted by Binance, OKX, DYDX, Bybit, Gate, BitGet, all of the big exchanges that offer perpetual contract funding rates. It's so much green right now due to people trying to ride the wave down, and that's pretty typical when we are getting close to a bottom. Now, besides the crowd behavior, we can also see something significant going on with whale behavior, the people with the most at stake and the key stakeholders for Bitcoin right now. Look at this. It just happened yesterday. Yesterday was the biggest whale transaction count spike that we have had since mid-March, about 3 months ago. 2,576 transactions occurred that had sizes above $1 million. That's huge. So it does show on this tiny little blip here that there was an increased amount of big transfers moving. And I would be fairly confident that that's reflective of some dip buying going on from key stakeholders who seem to finally be intrigued by this 25K level. Now, they were also probably intrigued by the profit-taking opportunity here when the price was still above 28K just 2.5 weeks ago. So pay attention to whenever you see these spikes, when the price is on a big trend, just like we saw here in late March, which was a big local top when all this whale transaction spike was going on, or the local bottom when there were a bunch of spikes here right before Valentine's Day, mid-February, just before there was a big surge. So yeah, I think this is indicative of a local bottom accumulation, which may be very short-lived and may actually have some life to it for a couple of weeks. It's hard to say, but I like to see that we're at a 3-month high in whale transactions. And we can compare that whale transaction spike with what's going on the actual key tiers here with 10 to 100, 100 to 1,000, and 1,000 to 10,000 Bitcoin addresses and how much they're holding of the overall supply. So if I look at just those 3 tiers, I'm going to add price to it. Let's make it a bar. Make it a little darker. All right. So what do we see here? We see just in the past few days, we had the 10 to 100 line. I hate the brown, so we're going to make that teal. That's a lot better. So 10 to 100 Bitcoin addresses have actually accumulated over the past couple of weeks. They've moved up. The red, 100 to 1,000, they were kind of going up and down, but at least just in the past couple of days, it's back up a little. And then the yellow is moving back up a little as well. So all 3 of these tiers are actually showing positive signs of getting more of the overall supply of BTC. And if I go to absolute, I'm going to click merge, and I'm just going to say, what do all 3 of these tiers, whoops, let's try that again. Merge, what do all 3 of these tiers have in common if we just put them together? Get rid of these. So this blue line now represents the overall amount of Bitcoin being held by the 10 to 10,000 Bitcoin addresses. Very wide range, but in general, this is kind of the meat of the key stakeholder tier that are holding anywhere between, 10 Bitcoin, which is right now about $2.5 million, all the way up to 10,000, which is about, what, 2.5 billion, if I'm not mistaken. Yeah, so $2.5 million to $2.5 billion. That's what this line is looking at. Anyone who's holding that range of assets in BTC right now. And yeah, since April 10th, which was pretty much right at the year high, right before it, they have gone from holding 12.84 million to 12.95 million. And that's significant because that's an accumulation collectively of about 110.61K more Bitcoin, or a little under 1% added to their wallets. It may not sound like a big percentage, but when you look at it in terms of collective Bitcoin accumulated, 110,000 BTC, you're talking about 110,000 multiplied by the price of BTC, a little over 25,000. That's, I'm not going to do the math, but it's it's, I think, in the tens of billions of dollars, hundreds of billions of dollars, somewhere in that pack. But if you just look at it in terms of context, right? Let's go today, go back to, we'll just go back to like 2019, June 16th, 2019, the last 4 years. So huge accumulation run. Notice how the price follows. This is a very good metric, and it has a lot of alpha to it. They take a little profit here in April 2021, right before the then all-time high. Then the price falls off a cliff. Once it does, these addresses start accumulating aggressively again. After a couple months of waiting, you know, because that's what a good alpha metric does. It gives you time to react after the accumulation starts. Price starts going up again. They finally start taking profit here about 2 weeks before the actual true all-time high that's occurred on April 9th or so, I believe. April 8th, or I'm sorry, November 8th or November 9th, 2021, depending on the time zone you were in. So they were already taking profit, and it goes down, all the way to more recently, where at the very least, we're starting to see a little bit of slowdown on all of that dumping. Go back to 3 months here. We'll do 6 months. 1 year. So yeah, the slowdown on all the dumping really started in late November, just about 7 months ago now. And we are above, the shark and whale tier, I should say, is above where we were 7 months ago. And that's rare because pretty much for a year, no, the past 2 years, it's been a steady decline where it's just been lower low after lower low. And that pattern's finally kind of broken now. So I like the sign of it. We're obviously not seeing aggressive accumulation or anything yet, but 110,000 Bitcoin added over the past couple of months is certainly not a bad sign at all. It's at least moving back in the right direction, and indicating that the bleeding is slowly coming to a halt, even though prices have, you know, on the short term continued to be an issue. Remember, by the way, that we're still up significantly since the beginning of the year. You know, you guys have heard the phrase, when in doubt, zoom out. Prices are still up on BTC 53% in 2023 thus far. So it's a matter of perspective. All right. So whales and sharks looking a little better. We touched on ratio of transaction profit to loss already. Dormant addresses, going back to just the past 6 months, not much to be excited about. There's still a lot of stagnancy in BTC right now, in terms of the older BTC continuing to collect dust in those respective wallets that they're in. A big dip in it, in this line here, would indicate that we are finally starting to see some circulation from the older addresses that have not been doing much. And that usually is one of the key ingredients to the next bull run. So keep an eye on that. But, you know, we've gone throughout the year without really seeing any major movement outside of this, right? And this was actually some of the older addresses finally taking profit, which is common when you see kind of a flattening out, which kind of was going on right after this big jump in mid-March. This flattening out is usually older addresses moving because the price, those older hodlers feel like this is about as good as it's going to get for a while. So it flattened out, then it resumed just going up. And really, sometimes it's one final big drop that occurs. Sometimes that doesn't ever happen. But if you do see a big drop followed by a mean dollar invested age drop, that would be a great sign that the bull run is probably imminent. Either way, that has not happened yet. Network realized profit loss, very little going on, you know, minor positive profit spikes going on. this was the big one, right? If you saw this realized profit spike on May 7th, about 6 weeks ago, that would be the warning sign that prices are about to likely go in the wrong direction. And that's exactly what happened. People would have been thrilled to take profit here at 28.9K or so. And since this realized profit spike, prices have fallen about 11.7%. Supply and exchanges continues to be a strong argument for being in crypto and not being too fearful. The BTC supply and exchanges is at over a 5-year low now, about a 5.5-year low. Early 2018 is the last time we saw levels below 6.5% according to Santiment data. That's huge because, of course, the obvious takeaway is that there is less sell-off pressure the lower supply and exchange goes. And also, I mean, it's indicative of people being very untrustworthy of exchanges at the moment. It only got worse as the news of Binance and Coinbase getting sued started to circulate throughout the crypto sphere. And you can see the impact right around the 5th and 4th here. 6.61% held 10 days ago, and now it's at 6.45. That's a pretty big drop in just a short week and a half. And by the way, exchange flow balance, you can see how the spikes became much more volatile here as the news happened. Social volume and dominance, as mentioned, the Twitter API kind of put a weird spin on social volume, but social dominance is still going to be accurate because that is going to indicate the percentage of discussions related to Bitcoin. Whether we're scraping from thousands of sources or millions of sources, that's still going to be an accurate metric. And you can see that social dominance has dropped off significantly, especially when altcoins began to really get hit hard about a week and a half ago. So that's kind of why social dominance toward Bitcoin has taken a bit of a backseat, because people are talking about the 20 to 30% losses that have occurred over the past week for much more volatile assets. And even though Bitcoin's sliding down, it's down about 5% in June. That's peanuts compared to the 15 to 25 to 30% for most altcoins right now. And that's why Bitcoin is just a little less interesting at the moment. Weighted sentiment, initially I thought this was a huge fear spike, but I actually think this is mostly related to our API changing and having significantly less social volume. So it may be a few weeks before this metric is truly relevant again. For what it's worth, Bitcoin's development activity, by the way, is starting to move up again. It's always, there's a cloud of mystery when it comes to the team behind Bitcoin and what's actually propelling its GitHub to show development. But regardless, it's never a bad thing to see that development activity is starting to heat up again. All right, I'm going to take a sip of water. And Balresh, if you're back behind the computer, could you tell me who's requesting assets and what they are? No worries.
Everyone, let us know in chat.
Let's take a look at a few other, check this out. I want to touch on that Tether article that I wrote yesterday, but I also want to look at a few of the big posts that we put out, like Curve being a top trending asset. After its founder deposited 24 million of Curve into Aave, look at all the shorting that went on. And yeah, since this time, there was a bounce, and then it kind of retraced along with the rest of the markets. But Curve still may be promising due to the fact that it's seeing such significant levels of bets against its price right now. This can very well lead to liquidations. And, I think there's probably a bit of overreacting going on to its founder doing some interesting things with its asset base right now. But stay tuned, pay attention to that. We also can take a look at the age consumed of Ethereum. For those who don't know, age consumed is a very interesting metric because it measures the age in which coins that were moved, how old they were, and multiplies that by the amount of coins that were moved. And we've seen two recent top signals for Ethereum that are admittedly impacted just by Bitcoin's market corrections by themselves. But look at how precise these were. Top signal right before the big downturn in Ethereum here, and then another one right before this huge downturn recently for Ethereum. And I think that this is a very, very good metric to take a look at, not just for Ethereum, but for any asset. Whenever you see these big token age consumed spikes, especially if it's, while an asset is rising, watch out. Another one I wanted to show. Chainlink, by the way, has seen some good accumulation with their sharks and whales. It was actually doing much better than most altcoins throughout the week. Today, it's kind of being flushed along with the rest of altcoins, but I still believe it's holding up a bit better. And one of the primary reasons may be the fact that those key, mid-tier shark level addresses, they're suddenly showing some serious accumulation signs right now. So keep that in mind. Also, even though there's been kind of a Twitter API change, look at how the impact related to the SEC and all the hype around it and fear. It actually started on a dip right here. You can see 4chan's big social volume, Twitter's big social volume, and even Reddit. Such big spikes related to the SEC lawsuit and Binance and Coinbase and the future of it. You can see that it actually caused a bounce as people were scared during this big dip. And then after social volume died down a little bit, that's when prices started to fall once again. So that's often how these big news events end up going. Even Cardano, by the way, pay attention to the high spikes in daily active addresses, volume, and social dominance that were going on earlier this week. We may see a repeat of this, but this happened right at its bottom, and then it's been bouncing a little bit since. That's just a few news stories we talked about over the past week on Twitter. Any questions now, Balresh, or should I just continue doing a few others? Okay, yeah, no worries. So I wrote this article yesterday called Be Clever, Weather the Tether. If you like rhyming, you'd love this article. Obviously, Tether had this big depeg a couple days ago. And according to Tether itself, they made a statement about it. And they said, well, the context was they turned over some of their key financial data to the US courts, and the US courts then forwarded the data to CoinDesk, who wrote an article about it. And according to Tether, they said, we find it suspicious that today's attack on USDT via both DeFi and centralized exchanges occurred on the day that materials were handed over to CoinDesk. This timing raises questions. All the same, Tether has nothing to hide, and we hold utmost confidence in the accuracy of our financial figures, while the sensitivity that we had to a government agency releasing confidential data, at least as it pertains to Tether reserves, is lower now than it was in 2021. We remain vigilant about customer data. While we can't count on fair coverage from CoinDesk, shots fired, which often misrepresented Tether's position in the market in favor of its main competitor, we call upon them to set their bias aside and to not publicly share any past or current customer names, and not to thereby put anyone in the community at physical or digital risk. So this is a whole lot of Tether saying, nothing to worry about, we're trustworthy, we're turning financials over to the court system when they ask about it. That's something that traders should be able to trust a little bit, even though there's a lot of misinformation and gray area regarding how much they're actually turning over. And they're also kind of blaming CoinDesk for what they're claiming was a bit of an attack. And people are scratching their head going like, was there really an attack? Because we see this depeg in Tether. It could have been insiders who got access to this financial data, perhaps moving a whole lot of Tether after finding out the information that they found out, and then it quickly recovered. And it's mainly back to $1 now, still a little bit below, but yeah, this was a big drop off, and I think Tether is referring to it as an attack, which it's hard to define what's an attack. If people are simply moving a bunch of Tether as a reaction to news they read, that's people doing whatever they want to do with their crypto, and doesn't necessarily mean the network is under an attack. But if there's a large enough move in Tether or any stablecoin, it can often be enough to impact that stablecoin's normal $1 price. And that appears to be what has happened. This isn't new to people who have followed Tether since its introduction in 2017, about 6 years ago now. We've seen several depegs over those 6 years, and almost always it's recovered. This is no exception, but yeah, it's always a concern when you see this, and often these depegs will correlate with an entire market-wide price drop. So it's interesting to see what's going on here, even though for now it doesn't look like it's had a long-term impact. We do see transaction volume went over $10 billion in a day for the first time in over 3 months. Circulation about a 3-month high as well. And then look at this big network loss spike that occurred on Tether yesterday. This was, I think I said in the article how long it had been. I want to say it was over a year. I didn't actually state it, but it had been a very long time since we saw a realized loss spike of this magnitude. So a lot of people saw this big drop and moved their Tether at a loss, feeling like it could potentially fall further, which it ended up not. But these are the kinds of spikes where if you're an actual arbitrage trader in stable coins, you actually want to see this, and you can feel confident that the price will likely bounce, and you can buy a whole bunch of Tether at a little bit under its normal price and then sell when it goes back to $1. Also, yeah, so this is what I mentioned. This was the largest drop since May of 2020 in terms of the supply and exchanges of Tether. So there's not very much on exchanges right now. That can be looked one of two ways. For one, there's less ability for people to buy more BTC and altcoins right now, which can be a bummer. However, history shows that when there's a big drop like this in supply and exchanges in Tether, it is followed by a rise in prices, which is what we saw in the months following Black Thursday in May of 2020 or so. That was one of the best performing months in the history of Bitcoin. So oftentimes this can be indicative of people buying Bitcoin. We are seeing some shark and whale accumulation in BTC right now, but it also could simply mean that just like the rest of crypto's assets, there's a lot of assets moving away from exchanges right now due to the distrust in Binance and Coinbase at the moment. So feel free to read that article in totality right now. It's up on our insights.santiment.net page. I made a similar post about stablecoins last week in terms of shark and whale accumulation. If I go to the latest on this chart, you can actually see an interesting phenomenon where there was a ton of Tether accumulation and then a big fall just in the past couple of days. But USDC is still staying very high. BUSD is climbing. DAI is kind of tapering off here, but is still at about a 6-month high. And then you can see this slight Bitcoin accumulation that kind of is the inverse to Tether. So my theory is that after this dip happened down to 25K, a lot of the shark and whale holdings transferred from Tether to back to BTC, which would be a good sign. They are buying the dip. Anyways, I think this might be a good ending point, to be honest. We've gone over everything substantially. Think about questions for next week, guys. I always like to jump into a few other altcoins. Obviously, Litecoin is one to keep an eye on with, I think, 7 weeks to go now, 7 to 8 weeks until the Litecoin halving in early August. So have that on your radars. There's going to be some volatility for that asset and arguably some bullish divergences forming. And yeah, that's about it for this week, folks. But thank you so much for tuning in. Hope you all have a wonderful weekend. On behalf of Santiment, thanks for continuing to spread the word about us. And don't forget to go into your account and check out that referral link if you'd like to make some extra money. Any analysis you do on Twitter, Reddit, Telegram, Discord, post a link to some of your favorite Santiment charts in one of your social community boards with your referral link. And when they sign up for a month of Sandbase, you get 25 to 35% of that. We give a pretty big chunk of anyone's purchase when they sign on. So yeah, on behalf of Ball Rush here, thank you for running the stream. And on behalf of Maxim, who couldn't be here today, and the rest of the team, take care, stay safe, and we'll talk to you next week.